Hello and welcome to another article video here on my YouTube channel. If you're new to the channel, welcome. I hope you're liking the videos so far. If you watch them, my name is Meydan. I'm a finance professional and I'm also founder of the fintech company called Adea LLC, where we do mathematical cycle modeling to calculate the future swing days, the swing hours, and the pricing for financial markets. Now, it sounds like a mouthful, but if you're watching the videos, you'll get the drift. Now, today's video, we're going to look at time and price and demystifying the trading volatility. Now, volatility for us, in fact, let's get into it here. Volatility for us as traders is important because if there's no volatility, then obviously we're not going to be making a lot of money, are we? So volatility needs to happen, but it's a two-edged sword. And if you're not properly prepared for volatility, it can really damage your account. In fact, it can do even much worse. You can lose your account or blow up your account and so on. So being mindful of when volatility is going to happen, at what price levels that's likely to happen is very crucial, and that's the kind of thing we want to calculate in advance. Now, generally traders look at the market, and as the market shapes up, they enter the trade according to their strategy, okay, which is exactly what we do, but we've got another tool which really helps us to get our trades more, let's say, with a higher probability of success rate, and that's timing, because we want to be at the right price at the right time. Okay, so volatility, let's first understand what it is for us. Understanding volatility, now it represents sudden, sharp, intense moves, right? Price moves in the market, and we want to be in preferably before the volatility happens, because if you enter before the volatility happens, then what you have is a smaller risk and your return is going to be much higher. But then this raises the question, well, how am I going to know when it's going to really be volatile? And this is where timing and pricing together correlated comes into place, and that's the whole idea. So how can this really help us navigate? Well, let's make this a little bigger as well. Can I make this a little bigger? Oh, yes, I can. Okay. So first of all, time cycles reveal when the volatility is going to happen. Okay, you've probably often seen, or if you're new to the channel, you haven't, but you'll probably see me if you watch further videos, how I give swing days for the markets and the swing hours for every day: Monday, Tuesday, Wednesday, Thursday, Friday. As you can see, today is Tuesday. I haven't done a video for Wednesday and Thursday. I don't work Fridays. And today is the 3rd of June. It's Tuesday. And everybody already had the full month of June. As you can see, June is really all here. I've just posted the full month of June here. All the swing days and all the swing hours, they were all posted in advance on the 21st of May. All right, so last month. So knowing all these days in advance and being able to look to the week ahead is giving us a lot of advantage, like in the gold trade we did this week, right? So understanding when that volatility is going to happen, knowing when that volatility is highly likely to happen, is the most important thing for us. So time cycles reveal when the volatility is most likely going to happen. So that's great to know. The other thing is price convergence shows key levels of attraction or rejection, which is exactly what we have here at the globaltrader.club. Now, this is the PST indicator, right? So what I'm going to do is I'm going to just move myself. So if I can move myself from here into there, that'd be great, right? So here, as you can see, I've got a PST indicator, right? Now, this indicator is not your regular indicator, like you've got RSIs, you know, I don't know, ADX or whatever you have there. You've got thousands of indicators that people use. What I have is an indicator that gives a price. So as you can see, once we have a breakout, the market goes to the targets, and once we're at a target, the market reverses down. Okay, so if I know the swing days, for example, this week's swing days for gold was Monday, right? And we had last Friday, that was a swing day, market made a low, and today being Monday, yesterday being Monday, we wanted to push up, which is exactly what we did at a trading hour, mind you. Okay, so this is yesterday. Let's do that. So you can watch actually 2nd of June's video, and you'll see that I actually entered the trade here, and I've posted it as well so that it's like a case study for everyone. And then as you can see, we went all the way into the targets because we knew the targets were up there. Why? Because the daily PST level gave us the targets. So we want to know when we're going to get volatile and how far that volatility is going to go, and not only that, but how long is it going to last. As you can see, I've got the vertical lines, which are the trading hours of the day, which is what I showed you a minute ago here. As you can see down here, we got it right on Monday, right? So you can see these were the swing hours, and I've made a few comments as well here. I said if the market does keep pushing, instead of breaking out, we should kind of like flow with it, and that's exactly what happened with gold. Exactly at the trading hour here, you can see at the trading hour it just pushed up. Now I was a little late for this one, and the reason that I was a bit late for it, because this is happening at 7 a.m. in the morning. So when I was doing the video, it's kind of like up here. This is like 8:30, and as I did the video, the market was here, and the minute it broke out, we got in. So knowing the time, knowing that we've got a volatility happening here because we've got a breakout on an indicator which measures time, space, and motion. And as that's breaking out, we've got targets to go to, so we can follow it all the way. And this is exactly what I did. I just followed it all the way, no stressing out, because we had the targets. And automatically I took I took a take profit at 3,369, and the other one I took a profit here manually because that was my evening, my dinner time with the family, right? Because I'm at UTC +3 time zone on the Mediterranean coast in Turkey. So that is why knowing the time and the price is really, really important. So let's put me back here and let's get back into the article. So if I know the price levels where they're going to converge, or where they're going to head to as well, remember, I must have a target. A lot of people make mistakes on not targeting their trade. You can't not target your trade. How can you go on a road trip if you don't have a destination? Same with your trading. You gotta, like, be practical. You have to know when you're going to get in, what price you're going to get in, what's going to be the trigger, and where you're going to get to. And we measure it here at the globaltrader.club with price and time together. Okay. And here you'll also have improved risk management. Why? Because if I know the time and the price when the market's going to move, obviously I'm going to be set because it's going to be minimum risk. My stop losses are going to be really tight. In fact, on the gold, I did say the stop loss is going to be just like 1 bar here. Okay, it was actually less than 1 bar because I entered on this bar here. It's a 15-minute chart here. And here, once the market entered, I put my stop loss just slightly under there and just actually moved it slightly higher into 1/3 from the low that it did. Okay, why did I do that? Simply because if I'm wrong, I don't want to be in that trade. If I'm right, highly likely with time and price, I will be. The market should go in my direction. So I don't need to have a big stop loss. And I don't have to doubt myself either, because that's the time, that's the price. So, why would I want to get myself in a big risky situation when I know that if that's the time and price, why risk more? For example, today as well. Today, on the 3rd of June, I had also a time available to here. And in the video today, I said, guys, I'm not sure about this level. Okay. And the reason I'm not sure about it is because this timing principle is stronger than this one. So I thought maybe it's just like, let it go. If we come back to a decent place and a decent hour, and today a decent hour is going to be actually in New York. And if in New York we catch a direction at the trade hours around here, all right, which is about 6:15 my time, and here 4:15 my time, okay, it's going to be New York morning session, we'll be able to see if we can get in at a decent price, and we can actually know until what time and what price to follow that to. So knowing that in advance is great, because it's like you can tell the future, and if you're wrong, your stop losses are really tight. This is why you can scale your account much faster if you time price trade, and I've done a video on that as well, you can find in the playlist. Okay, so case in point, volatility around the news. Now, as you know, many traders take the news into account. Well, we say to that, no, we don't take it into account, because we don't care about the news. And I've written blog posts and done a few videos on that as well. News is irrelevant for us because we're cycle calculating. We're pre-calculating everything. We're predicting. We're predictive analysts, not reactive analysts. So according to our prediction, it doesn't matter what any president says, does, or even if a war starts out. On October 7, when Hamas attacked Israel, we already had a swing day for gold the day before. Can you imagine that? The day before we had a swing day, and then gold shoots up. If it was actually a Saturday when that happened, because I remember very well the event, and then it was like afterwards, gold just went up. So previous week we had the swing days that happened, and then the following week on a Monday it just kept pushing up. So that was very important for us to know in advance, because if the price is low, you can get in. And in fact, despite the fact that a war did start, it didn't really affect us because we had a swing day at a low. All right, which is the same thing exactly what I did with gold this week, because we had swing days. The market was low. You see, we were down from last week's swing day. So this is last week's swing day. So market comes down into Friday from Monday. All right, so Monday, Tuesday, Wednesday, Thursday, Friday. Friday becomes a swing day. So you can see all the way we're down. And then from Friday, Monday, we've got a swing day. This is why we entered to go up, because the market was down. So going up was the logical thing to do, and the times matched. So understanding that we predict, and the news, the geopolitical events, doesn't matter. It really doesn't. And a lot of people still have a problem trying to understand that, because they say, well, how can that be? The whole world's going on news. The whole world can go on whatever they want. Our calculations with cycling are correct more often than not, and I'm showing it every day. And we don't care about the news. We do not listen to any commentary on the news. And in fact, in the trading program, I always say, do not listen to people. No news for us, okay? Don't listen to comments, don't listen to anybody. Just work on your strategy and your timing, bring it together and trade it. That's all. So reactive trading falls short. You're going to be stuck in front of the screen. Even if you're trading a session, let's say you're trading the best session ever, London or New York. Well, this didn't happen in London or New York. This happened on Monday in Asia. Well, not Asia, but my morning. Well, pretty much Asia closing session, right? So this whole session is Asia. This is my morning, 8 a.m. here, all right? And 8:30 market punches up, and that's my call, 8:45. In London, it's 6:45 a.m. Now, if you want to be in the office at 6:45, that's a different ballgame. All right, let me just make this visible again. All right, so it's this zone here. So my entry was 8:45, 6:45 a.m. in London. If you're going to be in front of the screen, like I said, at 6:45, you're cool, okay? If you're there every day, but you don't have to be. If you know the trading hours, why would you? Also, as an example on Monday, what I did was I entered another trade right here. Why? Because the market went up, comes back down into a trading hour, and then goes back up again and hits the targets. Okay, so do trading hours work? Yes. Are they independent from news? Yes. Can we predict them? Yes, we give them in advance. Okay, so all of June is already posted on the 21st of May. as you can see. And you got the whole month of June already posted. Any member here can just go into any month they want, any week they want here, and I've got all the archives for the past as well, all the way going into 2022. So as you can see, we're a pretty innovative fintech getting all this done. Now, ATAM means automated timing analysis for the markets, right? That's what it really means. And what we want to know is the day the market's highly likely going to swing and the hours. And then when we match it to our PST indicator, especially on a monthly, weekly, daily, it is the best trade ever. If you are following my videos, if you've seen the past videos where I've done case studies, you'll see also how the PST indicator works like magic when it's like, even without the timing, that works like magic because it's a price indicator. It's not a wiggly line. So once you've got your indicator happening and your time is happening, that's it. It's a bingo trade, and then you can just follow it all the way to the targets, because your strategy, no matter what strategy you're using, should give you also a target. Remember that, otherwise you can't measure your risk and return. So we know the future swing days and the hours. We know the price targets. We know the trade windows, high probability when that trade's going to happen. And also, if you know the hours, you know how far you can follow it through. For example, Monday I got out here. Okay, so it was in the evening my time. I'd been following it up nicely, and I wasn't in front of the screen. In fact, I had gym time because I didn't want to do anything until we got to the next decent trading hour, and it was there. The market retraced after the impulse back into it going there, and then I said, okay, it's time to get out, call the day, and have dinner with the family. So you can plan your trading according to hours. How beautiful is that? So volatility is not an enemy for us. In fact, we cherish it because our stop losses are tight and we're timing the market quite accurately with swing days and trade hours as well. So if you have that information in advance, when you got the swing days for the whole month ahead of you, the week ahead of you, and you got swing hours also all here listed for you with some comments as to what you can anticipate, what you can wait for. This is like seeing the future before it happens. And like I said, we don't really care about the news. The only time you want to look at the news is if there is news coming out. Is there a trade setup? For example, today, let's take a look at news for today. So it's a good example too. So here I've got news, right? This is today. Well, let's do the whole week. So this week we've got also non-farm payroll because the first week of the month, isn't it? So this is, look, here we have, look what's happening here. Yesterday we had news at 5 o'clock. Personally, I didn't even look at the news yesterday, all right? 5 o'clock. Let's see where that pullback was. That's 1 o'clock. That's 3:45, and that's 5:30 right there. So with the news, the market just went up into that trading hour. Nice and easy. Okay, we're right there. And then the market, as you can see, just stalled. Just kept going sideways, 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 no real action. And I'd already gotten out at the hours as well. Okay, so getting out at the right hours is really important. Now today, let's take a look at today. So today's Tuesday. We've got 5 o'clock news, right? So 5 o'clock news. And today we've got, look, we've got 4:15 and 6:25. So 4:15, if the price is right, whoops. If the price is right at 4:15, okay, we can trade. Okay, so if at 4:15 I'm down here, I can set up for the news, and that's going to be there. All right, so if the market is down, let's say in this zone where the market gave support in New York morning session yesterday, we can go long. If it breaks down, we've got room to come down, so we're going to be careful. But remember, we're trading time and price, so the stop loss will be really, really tight. If you're diving in like in a breakout like I did yesterday, it's going to be a 1 bar stop loss because you don't want to be there if you're wrong. So here as well, I've got pre-news, I've got post-news. So if the market goes, let's say, down and then up, I can sell in to these hours now. Okay, so now I've got like a predictive move right in front of me because I'm calculating with time. So that is just like really good as an advantage, because you know, you can see what's happening. So if we go back here, what you can do is really measure the swing days, the trading hours of the day in advance. You can look them up all in our members area, and then all you have to do is fit these swing days and these trading hours according to your strategy. It doesn't matter what your strategy you use. Just use timing with your strategy. If you're good at technical analysis, you know, whatever method you're using, I don't know, Elliott waves, demand supply, I don't know, support resistance, you can use whatever you want with your trading. It doesn't matter. If you match it to time, if you match it to swing days, you are highly likely going to have a great trade where your risk return is going to be huge. Yesterday's risk return was 1 to 7. In fact, it was 1 to 7.7. Okay, and that was at the first PST target. So this is also, I entered 4 trades yesterday. It's like, which ones? Let's take a look. Just bear with me. Let me open this up. Okay, so that one. So these were the 4 trades. These are yesterday, right? Yes, 2nd of June. 1, 2, 3, 4. So I entered 2 trades. All right. On this bar here, right? Once we broke out with the trading hours, okay? And then another 2 out on this bar, because that was the pullback, so we're looking to go back up again, okay? So I had 4 trades yesterday, all 4 of them in the same direction, okay? And they all went in our favor because we had targets to the upside. As you can see, all 3 of them got take profit targets. This last one, I got out manually, because that was a trading hour, and it was like I said, it was like dinner time with the family, so I didn't want to muck around there. So you don't have to be, you know, watching the screen 24/7. If you have hours on your side, you're trading really sensibly and really, really relaxed. Also, if you haven't checked out my videos on how to trade with time and price, I recommend you can do that. In fact, let me show you the YouTube channel as well, where you can do that. You can see I've got playlist here, okay? So in the playlist here, I've got trading tips, where you can see I've done a video on, oh, where are you? Okay, maybe not there. Anyway, here's the playlist, right? So in these playlist videos, you can see a bunch of, I don't know why it's not doing it, your playlist. Let's see. Okay, so if I press play, it comes up. All right, here you can see I've done a bunch of videos on trading problems. I've taken into account all of the trading problems that we have, okay, whatever you have, okay, and from everything. If you just also watch these videos, you'll find them really valuable, because with time and price, you can solve all of the problems that traders have. And if you enjoy reading, definitely check out the blog page of globaltrader.club. Here you'll find a bunch of blogs here that will really help you out with your trading. All right, I hope that helps. There are a bunch of them here, and I'm doing a video for every one of them for those who like a video. But if you like reading, it's worthwhile reading as well. In the interim, though, have a good one. I'll see you in the next video.